Welcome to Bank Promotion Exam Guide. Presenting a mock test on banking structure in India, covering 27 multiple choice questions. Question 1. Which banks in India are listed under the second schedule of the RBI Act, 1934? Option A. Non-scheduled banks. Option B. Cooperative banks. Option C. Scheduled banks. Option D. Commercial banks. Think the answer. Correct answer C. Scheduled banks. Scheduled banks in India are those listed under the second schedule of the RBI Act, 1934. Question 2. What are the two conditions under Section 42(6)(a) of the RBI Act a bank must satisfy to be considered a scheduled bank? Option A. Paid-up capital of 2 lakh rupees and RBI approval. Option B. Paid reserve capital of 5 lakh rupees and conduct not harmful to depositors' interests. Option C. Minimum customer deposits and government authorization. Option D. Profitable operations and regular audits. Think the answer. Correct answer B. Paid reserve capital of 5 lakh rupees and conduct not harmful to depositors' interests. Under Section 42(6)(a) of the RBI Act, a bank is included in the second schedule if it satisfies the following requirements. A bank must have a paid reserve capital of 5 lakh rupees and ensure that its affairs are not conducted in a manner harmful to the interest of its depositors to be considered a scheduled bank. Question 3. How many non-scheduled banks are currently in operation in India? Option A 2. Option B 4. Option C 6. Option D 8. Think the answer. Correct answer B 4. India has 4 non-scheduled banks in operation. Akhand Anand Cooperative Bank Ltd, Alvi Cooperative Bank Limited, Amarnath Cooperative Bank Ltd, Amod Nagrik Sahkari Bank Limited. Question 4. Which Act defines the banks that are not included in the Reserve Bank of India, RBI Act, 1934, and are thus considered non-scheduled banks? Option A. RBI Act, 1934. Option B. Banking Regulation Act, 1949. Option C. Banking Regulation Act, 1965. Option D. Indian Banking Act, 1956. Think the answer. Correct answer B. Banking Regulation Act, 1949. Non-scheduled banks are defined in the Banking Regulation Act, 1949 under Clause C of Section 5. Question 5. What is the minimum paid reserve capital required for a bank to be considered a scheduled bank in India? Option A. 1 lakh rupees. Option B. 2 lakh rupees. Option C. 3 lakh rupees. Option D. 5 lakh rupees. Think the answer. Correct answer D. 5 lakh rupees. A bank must have a paid reserve capital of 5 lakh rupees to be considered a scheduled bank in India. Question 6. What is the significance of being a scheduled bank in relation to the RBI Act, 1934? Option A. Eligibility for government grants. Option B. Eligibility for loans from RBI. Option C. Reduced regulatory oversight. Option D. Tax exemptions. Think the answer. Correct answer B. Eligibility for loans from RBI. Scheduled banks are eligible for loans from the Reserve Bank of India, RBI, as per the RBI Act, 1934. Question 7. Which banks are not eligible for loans from RBI for their day-to-day general requirements? Option A. Scheduled banks. Option B. Cooperative banks. Option C. Non-scheduled banks. Option D. Commercial banks. Think the answer. Correct answer C. Non-scheduled banks. Non-scheduled banks are not eligible for loans from RBI for their day-to-day general requirements. Question 8. Under what circumstances can non-scheduled banks be granted loans from the Reserve Bank of India? Option A. Only during financial crisis. Option B. Only during profitable years. Option C. Only during regular intervals. Option D. Only during emergency conditions. Think the answer. Correct answer D. Only during emergency conditions. Non-scheduled banks can be granted loans from RBI only in emergency conditions. Question 9. Which section of the Banking Regulation Act, 1949, defines the banks that are not included in the RBI Act, 1934? Option A. Clause C of Section 4 of the Banking Regulation Act, 1949. Option B. Clause C of Section 5 of the Banking Regulation Act, 1949. Option C. Clause C of Section 6 of the Banking Regulation Act, 1949. Option D. Clause C of Section 8 of the Banking Regulation Act, 1949. Think the answer. Correct answer B. Clause C of Section 5 of the Banking Regulation Act, 1949. Clause C of Section 5 of the Banking Regulation Act, 1949 defines the banks that are not included in the RBI Act, 1934. Question 10. What is the primary criterion for a bank to be classified as a non-scheduled bank in India? Option A. Lack of profitability. Option B. Limited customer base. Option C. Non-compliance with RBI regulations. Option D. Not listed in the second schedule of the RBI Act, 1934. Think the answer. Correct answer D. Not listed in the second schedule of the RBI Act, 1934. Non-scheduled banks are those that do not come under the regulation listed in the second schedule of the RBI Act, 1934. Question 11. What is the primary classification of scheduled banks in India? Option A. Cooperative and public sector banks. Option B. Commercial and cooperative banks. Option C. Nationalized and private sector banks. Option D. State bank and foreign banks. Think the answer. Correct answer B. Commercial and cooperative banks. Scheduled banks in India are further classified into commercial and cooperative banks. Question 12. Why is the State Bank of India recognized as a separate category of scheduled commercial banks, SCBs? Option A. Due to its large customer base. Option B. Because of the distinct statutes governing it. Option C. As a reward for exceptional financial performance. Option D. Based on its geographical presence. Think the answer. Correct answer B. Because of the distinct statutes governing it. The State Bank of India is recognized as a separate category of SCBs due to the distinct statutes, such as the RBI Act, 1955, and the RBI Subsidiary Banks Act, 1959, that govern it. Question 13. Which group in India includes nationalized banks and the State Bank of India? Option A. Cooperative banks. Option B. Public sector banks. Option C. Private sector banks. Option D. Foreign banks. Think the answer. Correct answer B. Public sector banks. Nationalized banks and the State Bank of India together form the Public Sector Banks group in India. Question 14. What characterize private sector banks in India? Option A. Incorporated according to the RBI guidelines in 1993. Option B. Owned by the government. Option C. Operational only in specific regions. Option D. Established before the independence of India. Think the answer. Correct answer A. Incorporated according to the RBI guidelines in 1993. Private sector banks in India include both old private sector banks and the new generation private sector banks, which were incorporated according to the revised guidelines issued by the RBI in 1993 regarding the entry of private sector banks. Question 15. How are foreign banks present in India? Option A. Through government ownership. Option B. Through their representative offices. Option C. As subsidiaries of Indian banks. Option D. Through joint ventures with Indian banks. Think the answer. Correct answer B. Through their representative offices. Foreign banks are present in India either through the complete branch subsidiary route or through their representative offices. Question 16. Which of the following types of banks has the majority of its share capital owned by the Government of India? Option A. Private sector banks. Option B. Foreign banks. Option C. Public sector banks. Option D. Cooperative banks. Think the answer. Correct answer C. Public sector banks are characterized by significant government ownership, reflecting a direct stake in the banking sector. Question 17. Which of the following factors typically does not influence the classification of a bank as public sector, private sector, or foreign? Option A. Ownership structure. Option B. Registered headquarters. Option C. Size of the bank. Option D. Regulatory framework. Think the answer. Correct answer C. The size of a bank, in terms of assets or branches, is not a primary determinant of its classification as public, private, or foreign. Question 18. When were regional rural banks, RRBs, established in India and what is their primary objective? Option A. Established in 1965 to promote industrial growth. Option B. Established in 1976 to facilitate rural credit. Option C. Established in 1980 to regulate foreign exchange. Option D. Established in 1990 to enhance urban infrastructure. Think the answer. Correct answer B. Established in 1976 to facilitate rural credit. Regional rural banks, RRBs, were established in 1976 with the primary objective of ensuring sufficient institutional credit for agriculture and other rural sectors. Question 19. What is the area of operation of regional rural banks, RRBs, in India? Option A. Nationwide. Option B. Limited to specific states. Option C. Restricted to metropolitan areas. Option D. Globally. Think the answer. Correct answer B. Limited to specific states. The area of operation of RRBs is limited to the area as notified by the Government of India, covering one or more districts in the state. Question 20. Who are the joint owners of regional rural banks, RRBs, in India? Option A. Government of India and sponsor banks. Option B. State governments and commercial banks. Option C. Reserve Bank of India and Cooperative Banks. Option D. Foreign investors and urban local bodies. Think the answer. Correct answer A. Government of India and sponsor banks. RRBs are jointly owned by the Government of India, the concerned state government, and sponsor banks, which include 27 scheduled commercial banks and 1 state cooperative bank. Question 21. In what proportion is the issued capital of a regional rural bank, RRB, shared among its owners? Option A. 30%, 30%, 40%. Option B. 40%, 20%, 40%. Option C. 50%, 15%, 35%. Option D. 60%, 20%, 20%. Think the answer. Correct answer C. 50%, 15%, 35%. The issued capital of a regional rural bank is shared by the owners in the proportion of 50% by the Government of India, 15% by the concerned state government, and 35% by sponsor banks. Question 22. Which bank holds the distinction of being the first regional rural bank in India? Option A. Moradabad Cooperative Bank. Option B. Prathama Bank. Option C. State Bank of India. Option D. Uttar Pradesh Rural Bank. Think the answer. Correct answer B. Prathama Bank. Prathama Bank, located in the city of Moradabad in Uttar Pradesh, is the first regional rural bank in India. Question 23. What distinguishes cooperative banks in terms of ownership and membership? Option A, owned by the government. Option B, owned by private individuals. Option C, owned by members who are also customers. Option D, owned by foreign investors. Think the answer. Correct answer C, owned by members who are also customers. Cooperative banks belong to their members, who are simultaneously the owners and customers of the bank. Question 24. How are cooperative banks often established in terms of community or interest? Option A. By government authorities. Option B. By foreign investors. Option C. By individuals from various backgrounds. Option D. By persons from the same local or professional community or with a common interest. Think the answer. Correct answer D. By persons from the same local or professional community or with a common interest. Cooperative banks are often created by persons belonging to the same local or professional community or sharing a common interest. Question 25. What is a characteristic feature of the banking products provided by cooperative banks? Option A. Extensive range of products. Option B. Limited banking products. Option C. Specialization in urban services. Option D. Focus on international banking. Think the answer. Correct answer B. Limited banking products. Cooperative banks generally provide their members with a limited range of banking and financial services. Question 26. In which sector do cooperative banks primarily function as financiers? Option A. Large-scale industries. Option B. Information technology. Option C. Agriculture-related activities. Option D. International trade. Think the answer. Correct answer C. Agriculture-related activities. Cooperative banks are the primary financiers of agricultural activities, some small-scale industries, and self-employed workers. Question 27. What principle do cooperative banks follow in their functioning? Option A. Profit maximization. Option B. No profit, no loss. Option C. Risk-taking. Option D. Global expansion. Think the answer. Correct answer B. No profit, no loss. Cooperative banks function on the basis of no profit, no loss. Quiz completed. Thank you for participating. For more resources, visit Bank Promotion Exam Guide.